It's still above the structural point, so we are kind of neutral for it. So I have the yen, which is giving me a big sell signal. So this again could be a positive trade. And if you look at the daily chart for the Swiss yen, you can see that we closed the week at 83.80. The structural point or the significant point is 82.40. So we have closed 140 pips above that structural point, and we have been respecting that structural point for the last several weeks. The only concern I have is I should have seen this explode to the upside, which I have not. That's the only concern I have. I mean, if you look at the dollar yen, look at the explosive move to the upside. If you look at the CAD yen, not really. Look at the Swiss yen, nothing really happening. If you look at the Aussie yen, nothing also happening. If you look at the pound yen, nothing really happening. If you look at the euro yen, also nothing really happening. So what has happened in the yen to give us this? What has happened to give us this in the yen? The only thing that's happening, which is profound, is when you can match it with another chart, and we only can match it with the dollar chart. This is what happened in the... So the majority of the move, which is the sell-off and the capitulation in the yen, has actually been dollar buying. And therefore, when we did our first signal to buy was in the dollar. So if you buy the dollar yen, you begin to look at the second yen pair, which is the CAD yen, so that should give you the second follow through, and then the Swiss yen, and then we're going to take they will follow in the same sequence. So let's look at the Aussie yen. And the Aussie yen is interesting. You can see that we closed the week at 80.61. On the intraday, I don't know why it's giving me two different closes for the day. It's anyway. So assuming that it closed above the 80.55, this means that we are not going to even think about selling the Aussie yen unless it trades below the 80.55. And you can see that on your intraday chart. This will be like your structural point over here. So we are going to short the Aussie yen below the 80.55. That's going to be your selling point. It is going to be your structural short, and of course it is going to be your stop. On the long side, we are still technically in a bull market, and we're looking for continuation to the upside. You want to be taking it out of the opening range, so we'll buy it above the 81.20 level. So because that's, as you know, the 80-20 rule. So we're going to buy it above the 81.20. If we do, we're going to place our stop below the market side. which does make sense. You're buying it above the 20 level, which is the option barrier, and we're going to put our stop below the market side, which is the 84. So you're risking about 40 pips on that trade. And of course your structural long point is the 82, 84. That's on the daily. So let's put these numbers in. We're going to buy it above 81.20, and if we do, we have a structural long point at 82.84, and our stop is going to be the 84. So this is the Aussie yen buying above 81.20. If we do, we have a structural point at 82.84, and our stop is going to be the 80.84 level on the long position. So you're risking about 40 pips on that trade. On the short side, you're going short below 80.55, which is your structural short, and it is your stop. Guys, when we pick a stop here that's 40 pips, do not take a smaller stop. If that stop is too big for you, let this trade go, don't take that trade. But putting a tighter stop than what the market dictates, what that's going to mean is that you are going to be risking the very high probability that you're going to get stopped out. The market goes and stops at one place and turns around. These are your stops where you need to put your stops at.